Hello and welcome. This is John Person here to give you a guide into what I feel are two of the most important trading technical tools that every trader should have in their arsenal. First is the person's volume, second is the person's support and reversal. And I've put them both on the charts. Sometimes when we get into a trade, it's not the importance of buying. Everyone knows how to get into a trade. It's when do we get out and identifying when the trend is starting to lose its momentum. And how do you trail stops? That seems to be a really key element that is lacking from a lot of traders. So here's the neat thing. When we look at this particular instrument, this is a utility stock, American Electric Power. Back in 2014, this sector was on fire. Now, what I wanted to share with you is note that the overall trend of the volume moving averages are up. And as you can see, we get this little downside price action. All of a sudden, we get some more upside. Well, we have the person's support and reversal in play. That's these green levels. And note that we start getting another aggressive move to the upside. So as the trend starts to prove itself and we see volume accumulation, and that's what these moving averages suggest. In addition, you will note that the histogram bars are starting to also confirm, allowing us to see that the volume is absolutely moving in a trending market condition. Now, looking at this weekly chart, we would also say, well, if I'm going to get long and using it with other tools that are available in TradeShark, of course, note that we want to know where do we place our stop and which candle do we place our stop loss. So we have in play our stop loss levels, and that's what those green lines are. All of a sudden the market spikes back down and you will note there is a red bar. That's the resistance line. So note that as the market pulls back down right there, see that? Most people would think, hey, look at this candle. It's a 3-candle formation, an evening doji star pattern. And to most traders, that's very bearish. And I agree, except for we need to look at the condition of the sell-off. Was the sell-off accompanied on heavy volume? In fact, the answer is no, because we didn't even get a moving average cross. The green is still above the blue, and the histogram is still near its highs. So that would have been maybe a false sell signal. Would not have stopped you out if your stop was placed below the green level, right? So you would have still been in the trade. And note that even if you did get out of the trade, at least if you went short, you would have put a stop above that red line. 1 week, 2 weeks, 3 weeks later it goes by, and look, we get another stop or a support level generated with an increase in volume and the volume histogram confirming. So all of a sudden we get the market to surge up, and then all of a sudden as the market pulls back and then shoots up, a new level is painted on the chart, letting you know that you can trail your stop. Now here's what's important. Most indicators help you get in. Few indicators will help you get out and understand when a trend is starting to lose its upside momentum. Note that the power behind both the combination between the volume tool and, of course, this person's support and reversal allows us to safely place stops where they belong, allowing us to continuously ride a trend in the marketplace. So as we just go forward, you can see a new person's support bar is revealed, saying, okay, time to move your stop up. And once again, we would say, okay, well, when do we see a change? Well, here's the key. And I just fast forwarded so that you can see this for yourself. When you get that market here, I want you to take a look at something. Note that while the trend starts to explode to the upside, and for a utility stock, I mean, most people would be happy with a 2%, 3%, 5% move. But when you start to see a stock getting into the 10% move, it's time to maybe focus in on, is that getting a little overbought, or is it going to continue to run forever? Note that as the market makes newer highs, the volume histogram is not confirming that move. And then all of a sudden, best of all, note that we have the stop and reverse in place, that green line right there. The market comes in and it would stop you out. Note that a new red line is revealed saying, guess what, guys? the trend has reversed itself. And if we draw a line straight on down, we go, wow, look at that. We have bearish divergence, lower highs in volume, meaning that that top had run out of buying pressure. And so that's where you now have emphatic information that says the trend is your friend, but the trend has run out of buying pressure and you got stopped out on the long side. And look, this saved your behind as far as knowing when to get off that train ride. And you haven't really missed any buying opportunities. And the volume action confirms that institutions are not back in the game. In fact, look at the zero line. It's showing us that it is not positive volume coming into the game yet. That's, again, a great way of looking at how to utilize these tools. Not so much as to knowing when to get in, but more importantly, knowing when to get out. These tools have been in my personal repertoire for decades, and I know that you're going to fall in love with them, and they're going to provide you tremendous yields in your trading in the years and decades to come. Thank you all very much.